Joining us now is FundStrat Managing Partner and CNBC contributor, Tom Lee. Tom, good to chat with you. As best as you know or can tell, what happened on Friday and what happened today? Because those days, 48 trading hours apart, are very, very different.
Yeah, Brian, as you know, stocks had done well for some time. So I think there's a lot of people that are worried about the air gap below because so many stocks move so quickly. And then jitters emerged. I'd say 3 jitters emerged last week. The first is, how strong is the AI trade, especially with some of the guidance that came out of Broadcom. The second, of course, is just the realization that Google is going to raise $80 billion plus SpaceX 75, OpenAI maybe 100, Anthropic 75, and then Meta, of course, filed as well. So there's a lot of equity being raised and asking the public to fund that. And the third is, of course, the geopolitical tensions. I think people get generally nervous into a weekend and they're worried about whether there could be something happening in Iran. So I think those are the jitters. And as you know, we get these pullbacks, in our opinion, and we commented over the weekend on this. I think it's a false narrative to think the bull market is in trouble. I think the bull market's still intact and in very good shape.
Tom, it's Kelly here back at the studio. And one of the areas that's been obviously most under pressure is crypto. And I know that you say people shouldn't throw in the towel, but I think it feels like a lot of the kind of buying velocity has simply left the space. And I'm not sure when it will ever return.
Yes. Kelly, I think people are really disappointed by crypto this year because, number one, they didn't go up when AI was going up. But in some ways, crypto is a downstream story of AI because as AI capabilities go up, we already hear it from a lot of those AI researchers, it's going to increase the need for blockchain because that's the only way to prove and validate transactions and actually protect us from AI. Last week, I think that there were some high-profile sort of, quote, AI security exploits, one that happened on the Orchid suite for Zcash. And that caused some panic. I don't know why it should have caused all of crypto to sell off. But keep in mind, AI exploits are happening at a rapid pace and an increasing pace across all of financial services. It's just that the publicly traded banks don't actually reveal the exploits. So I think that these attack surfaces are increasing everywhere, and we have to be mindful of that. And the third is, Wall Street is still tokenizing. It's a big innovation, turning money into software, tokenizing equities and real estate. These are composability issues that only happen on blockchain. So to me, I think the crypto narrative is still in good shape, but you're right. The excitement and the FOMO has been in AI.
Tom, going back to the stock market, we're seeing some of the Mag 7 stocks down. The Dow is down just a touch. The Nasdaq 100 is still up 2%, but all the averages have come back. We'll likely end the day higher, but if the S&P were to end the day lower after the boom that we had for the first couple of hours today, would in any way that change the way that you look at this market? And if not, what would?
Well, Brian, there is going to be a lot of tension in markets until June 12th, because I'd say there's a very large camp of our institutional investor clients that would say SpaceX is going to be the market top. So they're anticipating the markets to wobble. So what they're going to do is take profits and be cautious onto that date. But I'd say that history shows that the SpaceX IPO should not actually mark the market top. It's actually rare a big IPO marks a top. So to us, I think it's actually misplaced concerns. There's still $7 trillion of cash on the sidelines, and we already know the book's been filled. High net worth clients have a lot of cash available to buy this IPO. So I think the market's going to not only absorb this IPO really well, but I think the market's going to do well post-IPO.
If you only had a fixed amount of money, Tom, would you invest in these IPOs?
These are some of the most important companies led by what they call N of one people. I mean, I don't know if there will be another Elon Musk in our generation. So for investors who have not owned Tesla, This is a chance for them to have exposure to Elon Musk and all of what he's envisioned. And again, the addressable market for AI and especially data center, and as you move into space, is actually sizable.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Let's ask Schwab Center for Financial Research's Chief Investment Strategist, Liz Ann Saunders. Welcome back. It's nice to see you.
Nice to see you too, Scott.
Sorry I'm not at the stock exchange sitting next to you at post 9. So let me ask you, you look at what's happened in the market to end last week and then this rebound today. What does it have you thinking about where we are and whatever sort of shakeout that was?
I think it took a little bit of the overbought characteristic off the market, which all else equal is healthy, but it does show you that even absent some very pointed catalyst, and you did have last week in the case of what Broadcom announced, you can get some of these rotations. And sometimes they happen sort of across the market. Sometimes they happen within sectors like technology. And you and I have spent a lot of time talking about this. I think the rotational nature of the market and how you've got to look below the surface of the indexes is something that's likely to persist. I think that's sort of one of the momentum trades is actually rotation, and I don't think we get out of that anytime soon.
What do you think the impact is of this massive IPO to just shifting capital around, the way people are positioning around what will be the biggest IPO ever? There's been a suggestion among some market watchers that was in part why we saw the kind of violent activity we did in some of those chip names. I mean, even Ed Yardeni is talking about that pulling capital away from other stocks. Do you buy that?
Well, yeah, when you think collectively about the big IPOs coming, the argument that has validity is that the scarcity premium could get diluted a bit with the size of these offerings, even though the float is relatively low. So I think that was probably part of what we're experiencing, what we did on Friday, so much for that today.
Yeah, I mean, do you feel like the conversation on, I don't know, Thursday, Friday was, hey, is money going to come out of tech? And then are we going to have this broadening move? We're going to start positioning ourselves for when we think the end of the war is going to happen. I just wonder if today, even in one tiny sample size, is a bit of an indictment of that idea that the tech trade is where it's at. And the tech trade is going to be where it's at for a good while. And any useful dip that people see to take advantage of, they're going to do it before they start putting money in other parts of the market.
But Scott, I would say by tech trade, I would make that a lowercase t in tech, because I think what's happening here goes well beyond just the S&P 500 technology sector. You've got the Russell 2000 handily outperforming the S&P 500. Within the Russell 2000, you've actually seen some catch down on the part of the non-profitable names, a little bit of a convergence there. And you've got equal weight about in line with cap weight. So there's lots of ways to slice and dice breadth and narrowness or lack thereof. But I think this is a broader AI tech infrastructure build out that is not just accruing to the benefit of the large cap tech sector within the S&P.
How are you judging what the Fed might or might not do? I don't necessarily care about what the market is pricing in, because I don't credibly see that this new Fed run by Kevin Warsh is going to raise interest rates, despite what conventional wisdom might tell you about where inflation either is or where it may tick to from here. I don't know how you feel about or think about that at a time where we are thinking about rates backing up further and inflation still not at target and maybe remaining sticky.
Yeah, I don't think the Fed is going to be in any position to consider cutting rates here. And you might actually have some convergence in terms. I'm hiking, yeah. Sorry. Well, no, I don't think cutting. I think cutting is off the table. You got the market pricing in a hike, about a 75% chance that the first hike comes by the end of the year. I think that the data on both sides of the Fed's dual mandate is supportive of that. So I don't think you're going to get see Kevin Warsh get back against that at this point. I think what's going to be more interesting is in the short term what Warsh's approach is to the periodicity of press conferences, what his views are on the publishing of the dots plot, the summary of economic projections. Does he want to have fewer Fed speakers out there in the realm of, Federal Open Mouth Committee? So I think that's going to be the focus near term, particularly the first meeting, is how he lays out the framework for thinking about this. Every data point in the meantime, both on the inflation side of the mandate and the labor market side of the mandate, is going to adjust those market-based expectations. But given what we know now, I think the next move is more likely to be a hike than a cut.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.